Hey, welcome everybody. I hope everybody made the switch over. All right. Man, for all of you guys that got in this EU trade this morning, whoa, are we some happy traders or what? Look at this baby go. So it did what did we say? Do you guys remember? Did we not say that this is a 95% probability for a bounce? So we are now 38 pips and climbing. Woohoo! This is fantastic. So I'm going to just give you a snippet of yesterday's slide. And remember, I don't know, it was the next one. Nope, let's see. Previous. So all right. So our negative 2/8 was a 95% probability. Our negative 2/8 line, 95% reversal probability. Make sure you put your stop loss in profit, guys. Don't lose your profits. Move your stop loss into profit. Let's see. 3. Also, I didn't even put a take profit in. You guys want to make sure you do a take profit too. Know where you're going. It's just going so well. So if you want to trade this, well, Jenny, we have no idea. That's the market. It's has, tendency to bounce around here. And then it might stay in this 3/8 to 5/8 range before it continues on to the upside or whatever it's going to do. So you might want to, you might want to take profit or partial profit, and then let it continue. Typically, going 1, 2 is a good idea. Going to 2 lines, but you can let this run longer if you want to. I mean, if you look to the left. Let me see. Let's see if we can look to the left when it did this. Well, can't see my lines. So the last time it came down this area, it went all the way here to the 4/8. Team Jones, it closed on its own. All right, so yesterday we had some yesterday I did a lot of teaching. I mean, I went over a lot of slides, and really I feel like, that's a lot of information. So what I want to do is kind of go over and make sure that you guys understand if there's any questions. I'm going to go from slide to slide and ask you guys if you have any questions on that slide. How about that? Will that be okay? I want to make sure you guys have this down. So here we have the trading in the 3/8 to 5/8 range, and the market likes to stay in this area. It likes to trade between these areas 43.75% of the time. Did anybody have any questions on this one? All right. Remember that the market, if it goes above or below the 2/8 or the -2/8 or +2/8, then the lines will reset to its next higher or lower set of octaves. Okay? So in other words, if the market had come down here and didn't reverse, and it continued to the downside, all of these lines would reset. So we can see from the left, somewhere that the market, I'm trying to find it, right in here. So, well, probably what happened, no, this would have all been down in here. You're never going to look at this and have price with no lines. So this would have come from the top. It would have shifted all down in here. And then when price broke out, it went and it shifted back up. So they're automatically going to reset themselves. Okay? So currently, Super Baz, if you were on yesterday's, you probably would have been in about a 30 or 40 pip profit right now. So Super Baz, were you in yesterday? You can't just watch one video and then start thinking that you're going to have it all down. I mean, some people have, but not most. Super Baz, were you on yesterday? Okay, no answer. All right, well, we'll just continue on. So let's go ahead and look at this. So you guys know that it auto retest, and then also that pretty much we are counter trend trading. Okay, a lot of times we're counter trend trading. Here's the reason why. I'll show you something. So the market, where's my, oh, there it is. So here, for instance, you can see that the market was pushing to the upside, flattened out, and then started going bearish. Well, it's bearish, so in a bear market, you typically sell, correctly? And when we're trading the moving averages, you would be selling. Okay, but yesterday I talked about some great entry spots, and the -2/8 is a 95% reversal area. So when it hit here, we bought. Well, yes, we know it's a bear market, but we bought. And it's gone, like I said, between 30 and 40 pips profit. And I usually like to go to this area. So typically what I do in this market is I'll go to here, which is about 60 pips. Okay. Typically I'll go to the first strong reversal. All right. So Super Baz, I don't know, you might have missed our, you might have just missed when this came about. A lot of times these are the ones that I will do a sell limit or a buy limit on. Okay. And so let's see, what am I looking at? Oh, counter trend trading. So as you can see, the trend is bearish, but we bought here because this is a 95% reversal. All right, and so we can get out here or anywhere you want to. Here or here is a good place. Put in a trailing stop if you want to. Put in a trailing stop. Let's go ahead. All right, so let's go ahead and go back over here. And any questions about the fact that we're counter trend trading? Any questions about that? Before I go to the next slide. All videos are on imltvrecordings.com. Okay, so let's go ahead and right now we're looking at EURUSD. All right, so let's go back to our our PowerPoint, and look at the next slide. Okay, somebody had a question about counter trend trading. When you are counter trend trading, does the momentum line factor in at all? Not particularly, not here. When we are trading, let's just say, for instance, when we're trading the moving average lines, yes, then you're going to be considering the moving average lines. But we're not with what we're talking about today, we're not talking about the moving average trading lines, okay? All we're talking about is, now I'll refer to the moving average because it'll help us quickly look at trend. But when we're trading these pivot lines, like what I'm talking about specifically for this PowerPoint presentation, we are not really, you can always look. For instance, it's a good thing to look and go, oh, wow, look, the momentum is below the golden, the 13, so it's pushing up. All right? You can always take all of your knowledge into consideration. Okay? Always use your knowledge. But what you want to do is you want to know that specifically we're talking about entries and using these lines from yesterday's teaching. All right? So, because yesterday I talked about probabilities. And the reason why this first probability 1/8 line is there is because how many times it'll hit that line. Not that it's a higher probability of making profit, because as we know, the 2/8 line, the negative 2/8 line for going long, for a buy, has a 95% reversal odds. So you would think, well, that should be our highest first probability. Well, it's just because the market's going to hit the 1/8 line many more times than it will hit this 2/8 line. Okay? So the market So we are looking at trading the market long, right here, means buy, when it is reversing off its 1/8 line. That's our highest probability is the 1/8 line. Again, like I said, the reason why it's the highest probability, where's the 1/8 line? The 1/8 line is yellow, is because the market's going to hit that line more often than it's going to come down and hit this line. Okay? So that's our, to trade off that, you're going to get a lot more opportunity to trade off the 1/8 line and the 7/8 line. They're yellow. Think of the yellow lines. So whenever I trade off those lines, what I do is I let the market, let's zoom in so we can see it a little better. Okay, so when I'm trading this, and we're talking about going long, so I'm going to go to the right here, left, sorry. See if I can find it. Okay, so when the market is moving up, okay, the market's moving up, I let the market break through the 1/8 line and then do what it's going to do. It's either going to go through and continue, or it's going to pull back and then get in. But I'm going to get in on my next blue candle. All right, so obviously this one pulled back. Now, if we would have gotten in here, I like to make sure it pulls up and then I take the next blue candle. So had we gotten in here and the market dropped down, it went 5 pips, no big deal, right? And then typically I'll take it either the first or the second pivot line. Not usually the first, just depends on the pivots. But as we can see here, the trend was going up. The trend is your friend here. This isn't counter trend trading. The trend is your friend. So we would have taken it on to the second pivot. That's usually what I do, is I'll take it to the second pivot line. Sometimes I'll go longer. But here it is. That's not it. That's not it. Here it is right here. And I would have taken it 1, 2. That's 30 pips. Okay, I could have stayed in the trade longer, but I usually go to the second line. All right, so your 1/8 line, what you want to do is make sure, or any of them, okay? So let's look at these. The 1/8 line, the 0/8, okay, these are all good probabilities of where to go long. This one, I just set stops, limits, and let the market hit it and go. All right, these lines, they're for shorting, okay? The 7/8, the 8/8, these, the 1/8 and the 2/8, these are for shorting the market. This is when the market is reversing off of these lines, you short or you sell. See how in this image right here, the market went up, it came down. Here's the yellow line. I don't know if you guys can see that. That might be too small. Let me see if I can make it any larger. All right, so right here, see how the market was, it was a rising market. It came down and it closed below this yellow line is the 7/8 line. All right, this yellow one is the 7/8 line. So it came down to close below, and then you could get in on the second entry. It looked like, I mean, it was just doing really good. It did pull back for just a few pips, and then it continued to the downside. So I usually get out 1, 2 lines, or this ultimate is a good one to get. The blue one is an ultimate support and resistance line. The green ones are top of trading range and bottom of trading range, and the red ones are strong pivot reverse. So typically on strong pivot reverse, they'll kind of lollygag around and then they'll, pull back and then continue to the downside. Or in this case, the market sellers were strong enough that it went straight down. Today, we're going to talk about Heikin-Ashi candles because that's what I use with this particular trading system. So we'll talk about Heikin-Ashi in just a minute. No, I do not always use a 20 on this. The 20 is what I use for Web Analyzer. This, I definitely look at the market. Very good, Charla. That's awesome. On the extreme, hey guys, hang on just 1 second. I'll be right back. Wow, could you guys hear me? I didn't have my microphone on today. Hang on a second. I'll be right back. I just have a loud voice. Okay, sorry, we have company and my dog is barking. Sorry, it's my fault too because I let him in from outside. All right. All right, so I did. All right, so Tia, what about when you don't have access to the pivots? Well, then you just have to, no, we can't really tell you the entry. Guys, we don't have time to do that all the time. That's asking a lot, really. Okay. Okay, so this is the yellow line that I'm talking about right here. I'm not talking about the moving average. Tia, you keep asking about these lines crossing. I'm talking about when price crosses the pivots. All right. Okay, so let's see here. Let me go ahead and look at this next. Let me look at this next. I don't even remember what I was talking. Oh, this one here. Let me go ahead and one of the things, I'm not really going to go over this. This was a lot of stuff. Okay, let me go ahead and talk really quick about Heikin-Ashi candlesticks and the reason why I like to use them. And I purposefully took them off of this chart today so I could show you how to add them. Will you close that curtain, Brad? Okay, so let me go ahead and show you the difference in the candles. First of all, let me zoom in. And you can see here how the candles are kind of all over the place. I mean, it's red, blue, red, blue, red, blue, red, blue, red, blue. I mean, we can tell what momentum is by looking, pretty much. But let's look at what the Heikin-Ashi candlesticks do. Hang on just 1 second, guys. Hang on just 1 second. All right, that's not going to help. Okay, so I'm going to go ahead and show you on your navigator. So if you do view and then navigator, hang on just 1 second. All right, so we go to view and then we go to navigator. And in your navigator, you should have Hikanashi candles. Excuse me, sorry about that, guys. All you do, Hikanashi, all you do is take it and drag it to your chart. And then I don't change anything. I leave it like it is. That's the only I don't change anything. All right, so now and then the next thing I do is switch to bars. And now I have these nice Hikanashi candlesticks. Now what you're going to see is I don't have a bunch of red, blue, red, blue, red, blue. What I have is momentum. So Hikanashi trend bars or momentum bars really help you know what the momentum is. So we got a good idea here of what momentum is, don't we? So you're not so confused. Oh, is it going red? Is it going blue? What are we doing? And so it really just helps you with momentum. Not that you're not going to have a pullback, okay? Not that you're not going to have pullbacks. Definitely going to have them. Even just 1 or 2 bars like that. But it just helps clearly see what the trend or what the momentum is doing. All right? Does that help everybody? All right. So I know that a couple of weeks ago I mentioned teaching the moving average trading, but right now what I'm trying to do is get the basics. I want you to know how to trade these pivot lines. We're going to talk about moving averages again. Okay, but you can catch so many pips just by following, guys, just by following these steps here, your probabilities. I mean, oh my gosh, I'm getting messages where people are getting 40, 50, 60 pips at a time on their trades. Also, 300 pips a day. I've got people telling me they're getting 300 pips a day on this. Some of them took 5 trades here. Okay? Some people took 5 trades today. So when we got 30 pips, they got 150. Silk. It's just like your buy and your sell candles. This is bearish, this is bullish. You just don't have so many color variations between candles. Just up here at the top, here you have, if you're on candles, then you go to the left right here where it says bar chart. And you're still going to get wicks, guys. You're going to have wicks. You want that. That's good information. And of course, we expected right here this extreme support line. We expected it to kind of lollygag around here, and then I expected to keep on to hopefully this area right here. I'm probably going to get out of my trade right here. All right. Let's see, how many pips would that be? So that, I said that a while ago, 60 pips. And I'm not even sure that, oh, I said that one. I meant this one. We'll see. I'm bad about staying in. How about that one? 122 pips. All right. If you want to spread the candles out, go down to the bottom, Stephanie, where your dates are, and just spread it out. You can spread it out like that if you want to. Investor, yes, definitely during London. As a matter of fact, I have an intraday strategy that it's a reversal trading strategy, and it's based on these lines and trading the first 3 hours of London and US on the 1 hour time frame. I just don't know if we can get to it. You guys think we can do that today? You guys think we can learn that one today, or should I make a video by itself? Think I should make a video by itself on that strategy? Both. All right. So before I do that, because see, I've only got 30 minutes. I think I can do it in 30 minutes. Okay. All right. So let me think about that real quick. Let me think about it. Yeah, I'm going to have to, well, we'll get a video for sure. Let's see. I just don't want to rush things. I did already go through my PowerPoint again, and today was supposed to be this right here. Today was supposed to be the trading the London and New York strategy. All right. Now I've made my, I made this so small. Okay, let me show you guys one more thing about these indicators. Look down here at the bottom. See how it says 60? Can you guys see that? I'm going to draw a line all the way down to right here. See where it says 60? Everybody see that? Okay, so what I want you to know is I'm going to show you something. We're going to go to the indicators. I don't want you messing. If you mess with these too much, you will screw this indicator up. All right, I'm just going to tell you that right now. So be extra careful. The only thing I want to show you for right now is this. If you change the MM period to 0, what that will do, I'm going to say okay. Go ahead and note what price is extreme overshoot on. 1.22986. Everybody see that? 1.22986. All right. So I'm going to say okay. And I'm going to close. Now, did you see those lines just rebooted themselves, didn't they? All right, so I'm going to go to the daily. And the reason why I do this is it kind of resets it. And then to the M5. And then let me go back. And see, the major support is still at 1.22986. Oh, major support. Ha! Ooh, this is different. My UJ doesn't do that. That's weird. Let me try something again. All right, so that 60 was for 1 hour. So as you can see, this is the 1 hour chart, and that's where the extreme overshoot line is now. Maybe I don't want you guys to do this. Maybe I don't want you to do this. Maybe I don't want you to do this. All right, so one of my charts I have set up, and I use 0. And typically on the 5-minute, I haven't noticed much of a change in these lines. But this one definitely did. This one moved big time. Big time. You know what? Yeah, I wish I could erase that. I'm going to have you not change that for now. You guys don't change that for now. When we swing trade, we're going to change it though. My other chart, I have that on 0. The reason why, all right, so when you change, you can see here 1.22986 is on the extreme overshoot. And then when you go to the daily, definitely, you know, the lines adjust themselves for time, for different time charts, as you guys can see that. Let's see. Trying to show you something here. Anyway, so it adjusts itself for the different time charts, but it's based on that 60-minute time frame. When you've got that 60 down there, see how the extreme overshoot is still on the 1 hour, it's still here, and then everything below it, it's going to be there. For now, I'm just going to suggest you guys leave that on 60. In a week or so, when we do swing trading, we're going to change it. We are going to change it. We're going to change it to a higher one. But we're going to leave it right there for now. All right. So let's go ahead and talk about intraday. And we're going to go to the 1 hour time frame. So this is London intraday and New York intraday for the 1 hour time frame. Okay, and I particularly don't get up anymore for London, but for all of you guys that get up for London, Yahoo, or it may be like the perfect day hour for you guys in UK or somewhere else. Also, this is great for the first 3 hours of New York. Okay, first 3 hours of New York. So make sure you're writing this down because I didn't make a, I was going to make a PowerPoint for this and I didn't. So I didn't finish it. I started it, but I didn't finish it. All right, so the first thing you want to know is that, make sure you write this down, first 3 hours of London open, first and the U.S. session, okay, on the 1 hour time frame. Candles should be, you can make them any color you want, but for me, my Heikin-Ashi was already set this way. I do white for bull and red for bear. The reason why I don't use blue on here is because I've got so many other colors. These colors stand out the best for me. And this is just easier identification, okay? Now, the entries, write this down, entries are taken in the first 30 minutes of each hour. So if London opens at 8 a.m. for you, you're going to do it the first 30 minutes between 8 and 8:30, between 9 and 9:30, and between 10 and 10:30. If London opens at 2 a.m. for you, You're going to do this between 2 and 2:30, 3 and 3:30, 4 and 4:30. Okay? So make sure you got that. The entries are going to be taken in the first 30 minutes of each hour. Our buy zones, pay attention, write this down. Our buy zones are going to be 1-8. You know what? Let me go to London Open here. Let me go to London Open so we can look at this. Let's see. London opened at 2 a.m. That's 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Let's see, that's 15 hours ago. I got to do my math here. That was at... That was at 1800 for me. So let me draw a line at 1800. That's at 1900. Let me move it over. $1,800. All right, I don't know if you guys can see that or not, but I'm on 1800 right now. Okay? So, for us, our buy zones at London Open would have been at 1-8 right here, and 2-8 and 3-8. So if the market had been moving up, we'd been looking at 1-8. Well, this is a reversal. Sorry, I'm getting my lines confused. 1-8, 2-8, and 3-8 are our buy zones. Our sell zones are 6-8, 7-8, and 8-8. All right? So the market wasn't up there for this today. What we're going to look for is for price to open at the start of the hour. So I'm going to zoom in big, 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 big. I got to zoom in. And the reason why I make that line is so I can zoom and still know where I'm at. All right, so here we are. The market opened right. This is a bull candle. So actually the market opened here, came down, and closed here, as we can see by those lines on either side of it. But what we want to do is we look for the price to open at the start for the hour and to bounce off the major line and then reverse back up, okay, or down for a sell. All right, so what we'd be looking for, remember, we are looking for 1-8, 2-8, or 3-8. All right, so it didn't, our buy zone is 1-8, 2-8, and 3-8. So really here, 1-8, it didn't do anything. It didn't hit the buy zone. All right, it didn't really hit the buy zone in this hour. So the second hour, kind of the same thing. We're waiting just for the first 30 minutes. First 30 minutes. We're looking for the price to open at the start of the hour and bounce off the zone for a reversal, okay? And when the market opens, we have to see the initial direction, right? And so here, when the market opens, we can see that it was in an uptrend. It was trending up. So really, what we would have done is we would have looked for another pair, because well, it ended up turning. So I would have been looking here, here, and here, because that's hour 1, hour 2, and hour 3. These are the first 3 hours of the market. And so on this one, in the first 30 minutes, we're going to short. What we do is we wait for the first bounce off the level and see if it switches from, you know, well, it says from white to red. Is this making sense so far? And I took chats off because I didn't want to get sidetracked. This one's going to be a little bit more to wrap your brain around. So if you're brand new, you might wait. I would maybe not even watch any more of this because you guys have to still get the initial of what we're working on with the extreme overshoot. I think maybe we're probably going a little too fast. I think probably it's too much too soon. Because right now, everybody's still learning the pivots, right? Everybody's still learning the pivots. Yeah, I kind of think that maybe this is a little bit too much for us right now. I think maybe that we should just wait until people have just a little bit more confidence in trading the pivots, because we need to trade the pivots and then the moving average. Sometimes I get excited and want to show you everything at once. But what I don't want to do is have you guys either confused, trying so many different strategies. Right now, most importantly, everybody, you can trade this any time of the day. London, open, New York, whatever. It doesn't really matter. So I'm going to put a pause on that. And let us go ahead and get this down. Get your probabilities down. Make sure you get this down. When we're looking to short, when we're looking to buy, and then the next thing maybe we'll do is I'll teach the moving averages again. I think I'm going to make another video that I can keep in my archives for trading these pivots from my PowerPoint. That would be more along where everybody's at right now. Of course, we're going to have a little consolidation period, which is not unusual for this zone. Manual, they're usually up within 24 hours, I think. Maybe sooner. Just depends. Yeah, I think so. I think the next thing that we'll do is next week we'll go over. So really, I mean, honestly, trading these pivots, though, with the probabilities is key. And then we'll talk about price action next week and trading it with the moving averages. So when I teach you how to use these pivots with the moving average, then we're going to be trend trading. All right, and yeah, then we'll be trend trading. Yes, fantastic. Thank you for that, Joss. All right, let's go ahead and look at another pair real quick. Let's see what's going on. We've got a few minutes here. Here's another one that we traded this morning. It was UJ. And let's look here. The second probability of going short is the 8/8 line. And so today it bounced off the 8/8. And so we shorted that. And typically with this, I'll go like 2, and a lot of times I will go to the moving average because a lot of times it'll go to that 200 and then bounce. And I think I had put a take profit in that, let's see, where did it go? Mine hit take profit at, oh, that's a different one. Okay, so I didn't put a take profit in. I'm bad. I'm so bad. I'll just close it. I'm going to try to have both of these up here for just a second. I want to have these up here where you can see them because I want to show you something. But it looks like when I make that, all right. Well, I have no place to grab my PowerPoint. Okay, so I kind of wanted to have both of these up at the same time so you could kind of look at this. So your highest probability is 7/8, and I hope you can see this. I hope it's not too small. Here's your 7th, 8th line. Remember, the two yellow lines, the 7/8 and 1/8, are your number one probabilities, okay? So if you miss this one, for instance, like I like to get that one, if you miss this one, then, and the reason why that's not number one is, or even that's not number one, is because the market doesn't hit these as often as it does these. Okay, so just say for instance that you were able to, let's see, a little bit smaller so I can get all my tools. So let's just say for instance, maybe you missed this one, but you see it here. Here's your first probability, 7/8. Then you can get in for 1, 2, I mean that's 20 pips. And once you really practice this, then you're going to be able to really test it and maybe twin trade it or whatever you want to do. All right, and then the 8/8 line, which is I was saying that's the one that I got in today. Then you have the 6/8 line here. So what you do, I mean, you can see that the market is moving down. That's what I like about the Heikin-Ashi candles, is you can see that the market is moving down. It's in a nice downtrend here. And so downward momentum, rather, because the trend is really up. But it's in, you can tell by your candles that you have downward momentum. So here it hit this one, closed bearish. The next one, if you wanted to get in, you could take it for 10 pips or even 20 pips because, you know, it may or may not hit this one and then bounce back down because this is a strong pivot reverse line. Plus, You've got your green momentum pushing down. Still, it's been on an uptrend, kind of going sideways now, so we have a nice possibility of it pushing to the downside more. That's UJ. All right. And we talked about the zones. I don't even know if it was last week or this week. But we'll go over that some more. We'll go over that some more next week. I don't want to cram too much in here. But we did talk about the 8-8 and 1-8 zone. Because I want to use all of that. I want you guys to be able to use it all, but when you get overload, then you kind of forget, oh my gosh, you know, which line do I get in on? But I want to make sure that you, if you watch these recordings this week, just snapshot some of these slides. The videos manual are in the IMLTV recording.com. Yes, these entries are on the 5-minute. Hopefully by next week we'll talk about swing trading. All right, hopefully next week we'll talk about swing trading. I had promised that we would do intraday. You know, everybody's able to get 40, 50, 60, I mean, oh my gosh, 300 pips in a day with this on the 5-minute. But right now I'm going to wait on that swing trading tutorial. Well, you know, I mean, really, 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 really good. But gosh, there's so many pips to be had already. I mean, you know, guys, I traded this 5 minutes for like chart. I traded this right here for like 6 or 8 months. And able to get hundreds of pips a day because I was trading GJ, but didn't have to be GJ. It's just GJ is so volatile. It'll move 300 or 400 pips in a day. I don't trade GJ anymore. I quit trading GJ. Our EU's still going. Stephanie, did you catch this one? You said you need those pips. Girl, this one right here, to be honest with you, personally, I would personally put it in 4 or 5 times if I wanted to. This is one of those 95% reversal areas. Why did I quit trading GJ? I got mad at the pound. I got mad at the bank and the pound and just quit. And I just haven't gone back. Tia wants to know if we can still get in here now. Do we have a probability for 0.8? Let's look and see. We have a 7.8, an 8.8, a 6.8, a 1.8, and a 2.8. Here we have a buy on 0.8. So you know, Tia, you might want to see what, it's kind of going sideways right now. You might want to wait and see what it's doing. I'm expecting some kind of pullback here. Because this thing's going to break out. Could break out long. Oh, you know what? Honestly, guys, if you miss this one, I would get in here. Like if you miss this, jump in at this one. Oh, well, Tio, then do it. If you're doing demo, test it. But just go, if you're going to do it, just go like a couple of pips before it. Don't ever go right to it. Take profit right before it. Yeah, I mean, you could go for, yep, you could go for 10 pips here. Oh, no. Right here. All right. Well, guys, we are at the top of our hour. And so I think that class is dismissed. Hope you guys have a great rest of your day. Great weekend. We'll be on tonight at 8 p.m. Central Time, 9 p.m. Eastern Time for live trading. Oh, yay, Johnny. I'm so glad. I didn't even look. And GU should have too. GU is doing great. If you were in our last class, I think GU hit take profit, UCAD hit take profit. I don't even know. I don't even know which ones we took. All right. Thank you so much, everybody. Oh, how do you get the? I forgot, and I was supposed to do this at the beginning. How to get the indicator. Do not post your email in the chat. Do not post any of the pivot info on Facebook. Do not post Linda's email on Facebook. This is what you do. Oh, man, I was supposed to do this at the beginning. Everybody's like, I had to watch the whole recording. Well, you should. Do email Linda at lindagharmonic@gmail.com. In your email, subject line pivots. You're going to get a video that teaches you how to install it. And I just want you to know this is a gift. Where'd it go? Do not share this outside of IML. You're not going to help yourself at all by doing that. If you have someone that wants to learn it, send them to my class. And because they're going to need to learn, it's not going to help them to have the indicator and not know what to do with it. And please do not mass share this. So let's go ahead and make sure you have this right here. That's what you got to do right there. To get this, we'll send it to you. I'm going to put this in the chat. There you go. All right, guys, I will see you later tonight. Bye-bye.